Hi guys, Paul Seils. Thanks for joining us for the Conscious Investor podcast. I have with me Jet Yap. Hi Jet, thanks for joining us.
Thank you for having me, Paul.
How you doing?
Good. How are you?
Good. I'm well. So it's been interesting. It's been an interesting market, and we're going to talk about a couple of things, and then I'll open it up to some of the people that have maybe got some questions and that sort of thing at the end.
Mm-hmm.
But so we've known each other a number of years now. It's been an interesting time in the market. So the first question is, what are digital assets?
So digital assets basically are, things that exist as just bits and bytes. And I think, crypto has really changed the whole idea of what digital assets are, because previously, digital assets are basically just, sort of a record sitting in, a bank's database, or, it's sitting in, corporate entities database, say, for example, like, Facebook, Google, Apple, some of these entities would have, like your information, and, they store it. And, that sort of sits there as an asset, but, it may not necessarily be recognized as an asset, or, you never really sort of like gain, sort of full ownership over that asset. And I think with cryptocurrencies and, some of these digital assets that are blockchain based, it's sort of changed, how we view, digital assets. And I think that now we're starting to see that, the general population is starting to catch on to the idea of, starting to warm up to the idea of having, like bits and bytes sitting in an app, in a wallet, and then they sort of get the idea that, they actually sort of own the keys to that wallet, and therefore anything that's in that wallet also sort of belongs to them. But it's still a sort of an ongoing education process, and I think as people get more comfortable with the whole idea, and they sort of get involved, I think there will be a lot more like readily accepting this new form of assets.
I guess that's the thing as well. It's I mean, I've got a bit of background, and we've had these discussions over the year as well in relation to decentralization and that sort of thing in currencies. I think there's still a huge trust issue in the market as far as people going, who controls it, what's it backed by, any value. There still seems to be some resistance in the market as far as trust is concerned.
Yeah, I think it's a bit of a paradigm shift, right? Because the whole idea of money in the past, has been really like, it's sort of cascaded down. Say like, for us being, in Australia, we have the Royal Bank of Australia, and they're the ones that basically determine how the money flows and how it's sort of kept and secured. And
Reserve Bank of Australia,
yeah. And now, because it's all sort of like it's a whole new concept, so people still ask the same questions, but they sort of try to apply it to this new concept. And I think the first realization a lot of people get is that it's not really the same thing like what you would expect with say like you having an account with Combank, for example. Like there really isn't a one-to-one sort of apple-to-apple comparison in that sense. So I think a lot of people have sort of their first step that they need to do is they need to sort of jump through that hurdle and try and sort of look at it from a fresh perspective and understand like what it sort of entails.
Yeah. That's the thing, is that I mean, I know people that have and clients and that thing, they've got into the market since Bitcoin was about $3,000. But the point of contention, then normally the question that gets asked is, how does Bitcoin have its value? Who determines what the value is?
I think this is a very good question. And initially, when I sort of got into Bitcoin, I think this was like 2011. So it's 10 years now, right? We're full 10 years now. And back then, like it was like a game, honestly speaking. I mean, I bought my first Bitcoin for like $10 a Bitcoin, right? So I didn't buy a lot, so I'm not like a billionaire by now or anything. But like I think it was more of the idea of the it was a conceptual idea, and the conceptual idea was something, for me was like, oh, like this is really a form of asset that I can actually own, that I can actually like carry with me, that is not, like at any one point in time suffering a risk of it being seized by authorities. Now, again, this might not really happen in Australia, and like, so obviously with my background, being born in Malaysia, there are a lot of sort of rules and laws in Malaysia that protect the government and its banking system. And I understand that it's really to protect the wealth in the system, for the system sort of administrators, right, which is the Bank Negara of Malaysia. And so I don't sort of like what's the right word for it? I don't sort of think that it's wrong, but I do feel that being a part of that system is actually very risky for me personally, because like during the 97 era, and this is before I actually moved to Australia, and during that time we had a currency crisis, and the whole currency crisis existed because at that point in time Malaysia was sort of leveraging foreign like interest rates. So an example was Australia was actually giving very high interest rates at the time. I think it was something like 8% or like 9%. And so, the Malaysian bankers and, the central bankers, they thought, they were very smart. So they would go and borrow money from Japan, because Japan was basically giving out loans for free. So they would borrow money from Japan, and then they would take this money and then convert it into Australian dollars, and then lock it up in an Australian bank, right? And get 8% per year. Like what could go wrong, right? And what happened was that there was a very smart guy by the name of George Soros, and I'm sure like you and a lot of other people would have heard his name over the decades. And he saw this opportunity, and he basically just thought that like these are like suckers, like we can just completely smash them, and they did. So basically it collapsed the ringgit, and at that time the ringgit, I remember I was still very young then. I think it was like 10 years old or so. And at the time, $1 was equivalent to 2.5 ringgits. And I think at the time it was like 1 ringgit to probably like 150 Australian dollars or so. Or I mean, 1 Australian dollars to 150, $1.50, 1 ringgit and 50 cents. So the exchange rate was actually very favorable then. And what happened after that was the currency just plummeted in a free fall. And at one point it went to like $1 to 4.3 ringgit. So which means that it lost close to about 80% of the exchange rates. And this was because they sort of over leveraged themselves, and then they had to sort of close the positions, and like it's a lot more complicated than what I'm actually able to imagine. But for me, the effect is really felt quite badly back then, because we had a recession after that, and subsequently the interest rates in Malaysia, they increased from something like 4% to a tune of like 18% per year. So you were making 18% on your fixed deposits, and you were paying something like 23% on your mortgage. So it was horrible. And like we sort of went through something like 5 or 10 years of recession because of that. And during that period, the prime minister back then, Mahathir Mohamad, he thought of a kind of like a smart idea. He thought we should just limit capital from flowing out. So introduce capital controls. And what happened after that was that if you wanted to send money out of Malaysia, you had to sort of get approval from the central bank. So you had to fill out a form. I think the form was something like 4 pages. And like if you were privileged enough to have a banker, like a private banker, then the private banker would help you fill the form, and like you wouldn't have much trouble. But you could imagine if you were, say, like an average person on the streets, and you wanted to send money to like either relatives abroad, or you wanted to buy something, like it became a lot more troublesome, because you had to fill out this form, and you had no private banker to help you fill out the form. So you were just given the form, and you're supposed to fill it out. So that really changed a lot of things. And at that time, like I was also starting to learn about, the equivalent of the Counter-Terrorist Financing Act.
Right.
In Malaysia, it was called the Banking and Financial Institution Act, BAFIA.
Hmm.
And then they had this AMLA CTF, Anti-Money Laundering Act and Counter-Terrorist Financing. So, they were sort of like putting on a lot of restrictions as well because of, this so-called terrorist financing. But I think the other thing that really sort of got to me was the whole idea of this Unclaimed Money Act, where basically if you never touched your money for like 3 years or 5 years,
Yeah.
your bank account basically gets frozen and the money gets sent to the government. And in Australia, you can actually claim it back. But in Australia, they don't actually freeze your account that quickly. In Malaysia, it's like if you don't log on to your online banking for a year, it gets suspended.
Mm.
And then, after like 24 months, basically the whole account is frozen. And, to unfreeze your account, you actually have to physically show up at the branch and you have to present identity documents for them to unfreeze it. And even so, it's not really a straightforward thing. The best way is to keep your account active by depositing money every sort of like 3 months or so. So if you forgot about it, then your money could just have been gone.
Yeah.
And I think that was sort of where I saw the difference, with Bitcoin, because at the time, it had no value because people were just mining it with their computers. Because back then, we never had this these mining machines like these ASICs that they have today, that's mining something like, I think now you could buy a machine that's able to mine like 50 terahashes or something like that. Back then I was mining something like 12 gigahashes. So you can imagine, like that's a multiple of 1,000 or more, like, so in 10 years there was 1,000 times multiplier in terms of processing power that you can have in one machine.
Yeah.
And so back then it was just really just an ideological thing, and we were just basically supporting it as somewhat of a fringe idea. Say, wouldn't it be nice, if we could actually own assets that couldn't be taken away by the government, by no sheer fault of your own, just by, because in Malaysia, literally, if you left your money in the bank account for like 5 years, it's like they just close your account and then they take your money.
Yeah.
So, like you don't really want to end up in that kind of a situation. So, like that was what got me into Bitcoin. And I think the value now, it's being articulated very well. As I think Michael Saylor was basically saying that, Bitcoin is basically like, it's capturing all of the electricity that was actually consumed, to basically secure that ledger. And, today, after 10, 12 years of it being in existence, like you have a full record of 12 years. And also that record contains that 12 years of electricity consumed.
Yeah.
And that value essentially is sort of like, a representation of that electricity that was consumed. So you're putting value to electricity that was consumed over the last 12 years to secure this ledger. So that's one way of looking at it. But like again, I think with anything today, it's all somewhat faith-based. Like it has value because people sort of believe for it to have value. I mean, if you look at any other precious items as well, like diamonds, gold, even like really rare metals like palladium and platinum, it's an irony because in some cases you have metals which are even more rare than gold and platinum, but their value is actually lower than gold or platinum. And the reason why gold is so like well received is because it's being used as ornamental jewelry, and it's being used as ornamental jewelry for like 2,000 over years, by two of the largest population in the world, India and China. They love gold. So I think that in a sense have made gold retain its value. And I think with Bitcoin, as people start to understand what it does, how it works, and like what it means, for this asset to be around, and like it's a marvel in itself. Because I think if someone were to try and start like a Bitcoin again today, it's no longer the same. It's kind of a romantic story, right? Because now we don't know who Satoshi Nakamoto is. So we
Yeah.
all sort of constantly wonder, like, who's this guy? He still supposedly holds like 1 million Bitcoins, right? But he's not spent a single one of them.
Yeah.
So like sometimes you would question his motive, like what's he trying to do? And I think that's the real, where the real discussion is going on.
Yeah. Well, if he is a real person, he'd probably have some security issues as well, Jet.
I'm sure. And I think, the fact is that when he minted the first block, he was he put, the the crisis, like banks on the verge of collapse. So you could actually see that like hard coded on the first block and linked to an article, which showed, the I think it was a Supreme Chancellor or something like that, and on the brink of a bailout or something. And I think that was basically like, the foundation of this whole cryptocurrency. It was a way to avoid, like manipulation by, the bankers, and also the mostly the, the private and the corporate bankers, like the same guys that are trying to get into Bitcoin today, which is the irony, right? Like after 12 years.
Yeah. That is the irony, Jet. So the question that a lot of people are asking as well at this point in time is like, where is Bitcoin currently sitting at the moment in US dollars? I think it's about around 50,000 AUD at the moment.
I don't really follow the AUD prices, but I think it's tracking at about 44,000 US dollars today. And a couple of days ago it was like $39,000. So like it's jumped up quite a fair bit in the last couple of days.
Yeah. So people are asking, it's all crystal ball gazing at the moment, but people are asking, whether it's like what potential the upside of Bitcoin potentially has. And I know anyone that's listening to this, will put a link in there for people to get $20 worth of free Bitcoin as well. But people are asking the question of like, what's the potential upside for Bitcoin? And I know it's hypothetical, but say we're entering another phase that's potentially, because of the impact of the circumstances, will sort of make the GFC look like a little bit of a pale into insignificance. But like, what's the potentiality as far as that upside on Bitcoin is concerned?
This is a very good question, and obviously I would like to put a disclaimer here. This is not like an investment advice, so don't take my word for it. But I think essentially, the price of Bitcoin is right now it's at $44,000, and I think back when it was like at $10, I was already sort of telling everybody, I was like, this thing has a chance of getting 10 to 100 times return, like. And if I was still looking back at that first Bitcoin, like today it's like 450 times or even more, 4,500 times, really. You think about it. So where is it going to go from here? Is it going to get that same level of magnitude of returns that you'd see from a decade ago? I don't think so. So let's say in 10 years we've gone from $10 to $40,000. In the next 10 years we could go from $40,000 to $400,000 to maybe even up to $1 million or more. But the value is arbitrary, because I think the economic circumstances will dictate the price of Bitcoin, right? And so as there's economic situation that's happening around the world, it will create sort of a cascade effect, and I think that's what will drive the price up, because now I think we look at Bitcoin as sort of an alternative to gold. Because if we were looking at gold, I still think gold is an awesome asset, and I've held gold in the past before. I held a couple of kilos of gold, and like it feels really nice to hold gold, but at the same time, it's very hard to sleep at night, because like just the thought of it, having like 2 gold bars in your house, 2 kilos, right?
Yeah.
And you got to put it in a safe, and then you got to make sure that nobody knows that you actually have 2 bars of gold in your house.
Yes.
And so the physical security of it became a challenge. And then after that, if you actually needed to liquidate the gold, that comes with a cost as well, because when you buy the gold off the spot market, it's sometimes 10 to 25% markup on the spot price.
Yes.
And so when you sell it, they would buy it at spot price, plus commission. So which means that you would essentially lose 20-30%, just when you want to sell the gold bar. So I think that makes it a bit of a deterrent for like smaller investors, because I mean, if you were looking to buy like 5-10 grams of gold, like how are you going to sell it? Like if you're holding like a little piece of gold like that, size smaller than a fragment of your pinky, and you would go into a pawn shop and you expect to get a good price for it. I think that's the main challenge, right, with gold, is the liquidity around it. Now with crypto, like there's so many exchanges around the world right now, and particularly even in Australia, like we've got like 5 or 10 reputable exchanges that at any point in time you want to sell your Bitcoin, you could sell it back into cash, in less than 10 minutes. So I think that's where the benefit really lies, it's liquidity
absolutely.
that you can get with this asset.
And that's the thing as well. So there's a lot of confusion as well in the market as well, Jet. So I think there's sort of over 8,000 currencies or something in the market as well. So it's difficult for people to sort of comprehend, the same as we experienced with the early days with the internet. That was, Alta Vista and some of the other search engines were the predominant players, the initial starters. People are looking for the other ones that are coming through the ranks at the moment as far as the other currencies are concerned. What's your opinion about a lot of those other currencies, like being able to sustain themselves in the long run?
So I think the key thing that we sort of look here is that we're looking for what we call the network effect. And basically the network effect is the more people that is using that network. And so Bitcoin is like an asset, right? And Ethereum is an asset, but it's also a network, because you have nodes that secure the blockchain. So you have nodes that are basically just validators, right? So that they're auditors. So you can be an auditor as well, a validator as well, but you also have machines or nodes that are actually like full nodes, or the mining nodes, and these are the ones that provide the computation power in order to secure the network. And so all of these are bits and pieces of the whole network, right? So beyond that, you have like the people who have wallets. All those are participants in the network as well. So when we talk about network effect, we're talking about the cumulative network effect of the whole thing. So the value of a network is very hard to estimate, because like the nature of the network being somewhat pseudonymous, because you don't know the identity of the people that you are, or the addresses that you are transacting with. It's kind of like the internet, right? You have an IP address, right? So every time you're connected to the internet, you have an IP address.
Yes.
And in cryptocurrency, it's sort of the same. You have a wallet address, and that wallet address is yours, but no one necessarily know that it's you. So the only way that people can like sort of assess a network is by looking at the traffic and the addresses that it's hitting and pinging, right? And they sort of derive a model based on that, and give it a estimate value, or and these are all like best guesses. So like there are some people that are in data science that have a better model to sort of like assess or evaluate it, but like at the end of the day, it's all based on like the supply and demand. So with all the newer coins, basically it's like a startup, right? So you have a new network, and the new network, its goal is to find more users to jump onto the network. So then the main question always would be like, what does this network offer that the previous network doesn't have, right? And once we understand that as the question, then we sort of see why some of these newer blockchains are actually gaining value. And it's all just like because it's got like a new niche area that it's trying to solve, like something that an existing blockchain couldn't solve. So like some of these blockchains will survive, some of these blockchains won't. And I think it's kind of similar to how we look at like a startup, in like during the .com boom, there were a lot of companies, right? That I think they call them the pink slip companies in America, right? Where like it's cost cent, and people are buying them and hoping that it will go to like $5 or $10. And there may be one gem out of like 2,000 that get to that status, but the rest of them, they don't end up that lucky, right? So it's a probability thing, but I think in blockchain it's more easy to assess because you're actually looking at traffic, actual traffic, so you can actually look at things like how many updates the developer team is putting out every month, like how much engagement people are doing on their Telegram channel, and you can also look at things like how many wallets are there being in existence. Is there more wallets? How many people are holding tokens? And all of this will basically derive to a point where like you get to understand bits and pieces as to like how you would evaluate the so-called fundamental value. But again, it's all arbitrary, right? So like where it goes from here, I do believe it's going up, primarily because like it's quite tied to inflation rates. Like if inflation rates are going up, the price of Bitcoin is also sort of going up, in tandem, if not in multiples of the inflation rate. So like so it's yeah, I hope that answers your question, or at least gives you some idea.
Yeah, no, it's good. And I was also going to ask you as well in relation to, I mean, I got to go to BitCan in Hong Kong in 2017, and that was John McAfee was there as well, and Roger Ver and a couple of other people. They were talking about at that period of time about talking about asset tokenization. So taking assets and fundamentally splitting assets like real estate and the value of a house or whatever that was worth maybe $1 million, and then splitting it into 1 million units. Is asset tokenization, is that still on the cards, or is that created a lot of headaches and blockages because of the SEC and those sort of things at the moment, the difference between securities and tokenization?
I think definitely it has. And also, like with real assets, you have existing rules and regulations around it, right? So like if you were looking at real estate, real estate has its own set of rules, regulations, and also bodies that maintain the standard of the assets, sort of the record keeping. And as we encroach onto that area, you know what, you will get resistance, right? Because obviously you're stepping into someone's yard, and they don't look too positively on people that are coming and rearranging the yard, right? So that creates a bit of friction. Obviously there's a lot of benefits that can be like obtained out from like it's like a digital transformation, but it's a different form of digital transformation. And because the regulating authorities don't have the same level of regulatory oversight on these assets, that makes it very, very tricky, to sort of tokenize real physical assets into blockchain. But nowadays, you're starting to see more interesting things like, NFTs are a very good example, right? It's a tokenization of something that is non-physical, or it can be a tokenization of something that is also physical. So we're now blurring the lines, but I think the conversation has shifted, because before it was like we're trying to create a security that is not viewed as a security, but today it's basically saying that, look, I've got digital stamps that mean something, and that digital stamp is not a security.
So you're referring to NFTs, which is non-fungible tokens there, Jet. What you're sometimes people have been paying more for the non-fungible tokens than what they have for the physical asset.
So in a way, I think, yep. Sorry, I think I lost you there for a couple of seconds.
Right.
There. Are we back on
yes,
real time? Okay, that's good. I think because of the whole idea of it being digital, I think now the relationship with actual value has somewhat gotten skewed. So I think a lot of it is partially hype. So I think in time to come, a lot of it will sort of stabilize. But for now, I think the hype is going. So there's a lot of interest, and because there's a lot of interest, there's also a lot of people speculating on these things, and they might end up being very lucky, or they might end up getting burned. So I think that's part and parcel of the whole journey, so to
Yeah.
speak.
Yeah, absolutely. I remember, I don't know whether you remember, we had some gentlemen that came and visited us for a conference in 2018, and they were from hedge funds. They were relying upon, and they calculated the risk of about 90% of their projects that they invested in to fail. So, but the some of the projects that they did invest in ended up doing like 100x.
Yeah.
Mm.
So it's
So
a
that's
probability game, essentially, for a lot of these bigger players, because like you plant 100 seeds, and one of them grows to a very big tree, and a couple of them turns out to be seedlings, and then the rest of them never germinate, right? So it's a game of probability.
yeah, yeah. So as I said, we're going to post a link this for anyone that wants to get started. What's your advice for the
Okay, I think I lost Paul. Paul?
Sorry, Jed, I lost you.
Yeah,
Yes.
I think you disconnected for a second there.
Yes. Sorry about that. Apologize about that.
All good now, or is it still connection still bad?
Can you hear me, Jed?
Yes,
Okay, great. Sorry.
no worries.
We broke connection there. Say that again about getting started in the market.
Um, sorry, what was the question again? I sort of got
The question was
distracted.
advice for people getting started in the market that sort of maybe feel that Bitcoin's perhaps lost its, that they don't have the upside that's possible as far as getting involved with Bitcoin's concerned. Any other projects about getting started for people that are newly entering the market?
I think this is just a personal opinion again, not investment advice, but you should always have some Bitcoin and Ethereum in your portfolio. Primarily because it's like, it's the sort of like the blue chips of crypto, right? So you don't really want to be playing around with all of the penny stocks if you don't have a portion of your portfolio allocated into, Bitcoin and Ethereum, because I mean, in 10 years time, you're still looking at something like a 10 times multiple, right, on Bitcoin and Ethereum. And, in all honesty, I think if you can find another asset class that's going to give you 5 or 10 times return, like, you probably wouldn't be dabbling in crypto, but because crypto is actually literally the fastest growing asset class of all time. So, like, if you're trying to just chase like, the gains without actually having, like, a portion of your money sitting in like real sort of like value assets, that won't depreciate over time, or you will experience volatility, right? So I mean, today it's at 45,000. I can't promise you that tomorrow it's not going to be 20K. It can happen, right? And as we say, like a black swan event can happen anytime, and it can be positive or it can be negative, right? So we don't know. We only can work with what we know, and the things that we know is there's a limited amount of Bitcoin that's out there. So there's only 21 million Bitcoins. And if you look at today, there's a portion of these Bitcoins that are lost forever because people forgot their passwords. You hear horror stories about people losing their hard drives, ended up in the tip, and the guy's now like, hunting for his hard drive in the tip, right? This British guy, right? And then you have some of these Bitcoins that are actually locked in other networks. They're locked in the Ethereum network. They're locked in the Binance BNB network. They're locked in the RSK network. And then you have REN BTC, so I think there's about 6 or 7, like different places where Bitcoin is locked. So the actual real floating Bitcoins that are out there, who knows what's the exact number, right? It could be like 12 million or less. So I think it's always good to have that as a part of the portfolio. Like rain or shine, like you should have some of it in there, and recently, just 4 days ago, we had this Ethereum upgrade. They call it the EIP 1559, and because of that, Ethereum has started burning Ether as fees. So I think they've burned close to 10,000 Ether already. So now Ethereum is also becoming a deflationary asset. So you should have Bitcoin and Ethereum in your portfolio at the very least.
Okay, that's great. So we've covered a little bit of ground anyway. Is there anything else that you wanted to share in relation to experience or forecasts and that sort of thing as well, Jet? And then I'll stop the recording, and then we'll get some of the other people that might have some questions for you as well.
Yeah, so I think I guess for anyone that's sort of getting into this this space, is there's no real better learning experience than to get skin in the game. Even if you have a little bit of skin in the game, it gives you a bit of a feel of what to expect if you were to ramp it up by 10 times the portfolio size or 100 times. Because I think, for me, one of the hardest things, even after a decade, is the volatility. I mean, no one likes to go from, like hero to zero, in a year and come back as a hero again. Like, it's not a nice feeling, but you need to get through that emotional roller coaster, and you sort of just have to understand that that's just how the market is.
Yes.
And if you want to get in this space, you got to be comfortable with that.
Yeah, because I mean, we've sort of experienced it a couple of times, right? So it was the peak of the 2017 market, and where do you think we are in the market at the moment as far as have we experienced a recent peak? Are we going through a plateau at the moment, or are we through a consolidation phase?
It's hard to say. I mean, looking at some of the the flows of coins, particularly I'm talking about Bitcoin here, it looks like there's a lot of coins that are actually moving off exchanges, right? So which normally means that people are pulling their coins off the exchanges and keeping them in either their private wallets, or they're doing something with it. No one knows for sure. But that just means that there's less coins that are trading on the exchange. So if people were to buy them on the exchange, it would most likely create a positive upside, because supply is fixed. So like the only thing that's a variable is the demand, whether it's like artificial demand or whether it's real demand. But that's the only thing that sort of creates the the price movement.
Yeah, absolutely. So thanks for joining us, Jet. Thanks for listening in to this podcast. I hope that it's exposed you to a little bit more experience as far as the digital markets and currencies are concerned. It's a huge realm, and I know for myself personally, Jet, I could spend probably all my time just focusing on the digital markets, and still probably only know about 5% of what's happening as far as projects, etc., are concerned.
Yeah, and I think it's a
Yeah.
very exciting space. Like you tend to go on a bit of a rabbit hole, or like you either get really overwhelmed, and then you sort of have to really like pick it up piece by piece, try and understand the fundamentals behind it, and then after that you can sort of somewhat navigate through it. Like it's a bit of a journey, and I think it's a very nice, exciting journey. So like definitely the more people that come on board, I think it's good learning experience for people, in terms of like just getting to know something new, and potentially something that can change your life.
Yeah, absolutely. Good stuff. So Jet, yeah, thanks for joining us.
Thank you, Paul.
Thank you.
You still have questions? Like, are you going to open it, or is it, are we good?